Talk to me about why you're downgrading your earnings story and why you haven't cut your outlook for the S&P just yet in a big way.
So a couple of things. What I would say first is that, I think it's important to keep in mind the house call remains for a recession, at the end of next year, but not near term. I think the word that everybody is talking about is fluid, so things remain pretty fluid. And most of our downgrade to earnings is about next year, building in that slowing in growth and recession later next year. I think the bigger issue for the equity market on earnings, of course, is what the bottom-up consensus is doing and what basically it is building in. And what I would argue is that basically, the bottom-up consensus has 10% earnings growth for this year, 10% earnings growth for next year. On the face of it, there's nothing wrong with that. 10% earnings growth is actually the average earnings growth outside of recessions.
Within the sum of this, and Folkert Landau and your team, Lazzetti with us this afternoon, folks, has just been, you guys have been just absolutely lights out on engaging the conversation. Engage this. Does profit matter? And when you look at earnings shortfalls, can you partition companies that are going to still make the bacon from those that are really challenged?
Yeah, but what the market, really reacts to. So if you just overlay upgrades, downgrades, or the change in forward estimates in the S&P 500, you'll see these pretty tight fit. Not over the last couple of months where the market's, way lower. And so earnings estimates do matter. Keep in mind that, every earnings season, the S&P 500, beats on earnings by about 5%. So it's, not something that the market reacts to in a big way, but, persistent period of sort of downgrades is going to be an overhang for the market. And what I would say about the bottom-up consensus is, while the headline numbers, look okay for mid-cycle or early cycle, they do not look right for late cycle, where our house view, the consensus of economists, is for growth to slow. And as growth slows next year, earnings will come down. And in addition, we have, the pandemic hangover, as I would call it, built into consensus estimates for mega cap growth and tech, which got boosted by the pandemic. And the consensus has them rising with trend, even though they're currently 20% above trend levels. And staying there would be hard.
I'm struggling here with this idea that we're going to get earnings downgrades. We're seeing the end of free money. We're seeing real yields on the 10-year go up to 0.8% after having been deeply negative just 3 months ago. And all of this is going to somehow end the S&P at 4750 at the end of the year. What gets us there?
Yeah. So I think the key question is basically, are we going to go into a recession? We've been arguing for some time that the outlook looks pretty binary. We would get down to about 3650. We are kind of almost there already. And then it looks pretty binary whether we go into a recession or we don't. Recessions are pretty non-linear events, is the way I would think about them. It is not about temporarily negative growth. It's really about corporates becoming risk averse. Not great, signs yet, but take a look at CEO confidence. It's down. I think the consumer confidence numbers get more, attention, but corporate CEO confidence down too.
Just real quick here then, what's your bear case?
My bear case is if we go into a recession, we have a target of 3,000, which would basically be in the upper range of typical recession drawbacks or pullbacks. A recession declines in hindsight were extremely well explained basically by initial valuations and the severity of the recession. So if you use, a typical recession, year-on-year quarterly decline in earnings of 21%, and where we were valued initially before the pullback began, you're talking about 35 to 40%, which would take us to basically 3,000 from the peak.
So, Binky, just to be clear, if Matt Lazzetti's right, it's 3K on the S&P?
No, if Matt Lazzetti is right, that there is no recession right now, and that issue gets resolved in the markets, and the market starts to price that out, then we get 4750 by year end. If we do slide into a recession, we are talking about 3,000 on the S&P. Typical recession, assuming it starts now, is about 11 months, so you would get a bottom 3,000 around November. And, you would get to 47.50 by May of next year, since the market typically starts to, bottoms basically halfway through.